So the intrinsic value of the call option will be the underlying stock price minus its call strike price. So we have to subtract the stock price with the call price, then we'll get the ITM. Hi friends, Chitra here. Welcome to my YouTube channel. In this video, we are going to discuss about the option and option premium. Options are the type of derivative product that allows the investors to speculate on. So option and futures are the derivative product. Then who are the speculators? They will judge the future price of the market. They will do both buying and selling. Option allows to hedge against the volatility of underlying stock. Means what? So say for example, if we purchased a stock, if we buy a stock and that in some worst scenario, what will happen? The price will decrease. So in that case, we will use the option to hedge against what? Against the volatility of the underlying stock. Options are divided into call and the put options. So call option is that which allows the buyers to be in profit if the price of the stock increases, and put option, in that case the buyer will be in profit if the price of the stock decrease or decline. Next we will see what do you mean by option premium. So option premium consists of the components, namely intrinsic value and the time value. So how we will get the option premium? Option premium is equal to intrinsic value plus time value. So I have uploaded one video about the time value. How can we get the time value? Please go and check that video. I'll put the link in the description box. What is intrinsic value? Intrinsic value is the amount by which the strike price of the option is in the money. So only ITM will have the intrinsic value. Okay. So the intrinsic value of the call option will be the underlying stock price minus its call strike price. So we have to subtract the stock price with the call price, then we'll get the ITM. And what is the intrinsic value for the put option? It's the put strike price minus underlying stock price. So if the ITM will be put strike price. How can we calculate the ITM for the put options? So we have to subtract the put strike price with the underlying stock price. And ATM and OTM options do not have intrinsic value. So we will explain in detail what is ITM, ATM and OTM options. Okay. What do you mean by in the money? In the money for the call option. And in the money call option is described as the call option whose strike price is less than the spot price of the underlying asset. Okay. Say for example, in Nifty, the in the money call option would be any strike price that is less than 18,000. Say for example, if the spot price of the Nifty is 18,000, so any strike price which is less than 18,000 is called ITM or in the money. So ITM, in that case, the strike price will be less than the spot price. Okay. So Nifty 17,400 call would be the example for the in the money. Okay. And in the money call option always have some intrinsic value and time value. At the money, that is ATM. ATM for the call option. At the money, call option is described as call option whose strike price is approximately equal to the spot price of the underlying assets. That is, strike price equal to spot price. Nifty 18,000 call would be an example for at the money call option where the spot price is 18,000. If the spot price of the Nifty is 18,000, in that case, what will be the ATM? ATM will be the 18,000 call only. Okay. At the money call option does not have intrinsic value and it consists of only the time value. At the money don't have the intrinsic value and it is having only the time value. Out of the money, that is OTM. OTM for the call option is the call option whose strike price is greater than or higher than the spot price of the underlying assets. So OTM means the price, the strike price will be always higher than the spot price. So OTM call options entire premium consists of the time value and the extrinsic value. Okay. It does not have any intrinsic value. So in ITM only the intrinsic value will be there. Intrinsic value and the time value will be there. So in OTM there is no intrinsic value. So say for example, what will be the OTM if the spot price of the Nifty is 18,000? So in that case, OTM will be 18,200. That is, any strike price which is more than 18,000 is called as an OTM. OTM for the call option. So the ITM, ATM and OTM will be different for call option and for the put options. Okay. Now we can see how the premium is calculated. That is, option price is calculated if the spot price of the Nifty is 18,300. So how the ITM, ATM and OTM is calculated. Okay. So the strike price. So the spot price of the Nifty is 18,300. This is for the call option I am talking about. Okay. So 18,000, anything, any strike price which is less than 18,300 is known as the ITM. Okay. So we'll start with the 18,000. 18,000 is called as the deep ITM. Okay. So 18,000 ITM, in that the option price will be 330. So in this 330, the intrinsic value is 300. So how we'll get this 300 is 18,300 minus 18,000. That is, we are subtracting the spot price minus the strike price. That is called 300 we will get. So in this, what is the 30 then? 30 is called the time value. So ITM will be having the time value. Okay. Next, for 18,100 ITM. For that, the option price is 240. Okay. So here will the intrinsic value is 200. So the rest 40, the 18,300 minus 100 is 200. So the 40 will be the time value for 1800 call. Next is 18,200 ITM call option. In that, the option price is 160. So here ITM, that is intrinsic value, will be the 100 and the 60 is the time value. So when you go for the nearby ITM, the time value will be more and the premium will be very less. So 18,300 is called as the ATM, that is spot price and the strike price will be equal. Status, that is called ATM. Here the option price is 80. Okay, so here there is no intrinsic value for ATM and time value, only there will be having the time value. Why? Because 18,300 is a spot, because both are equal, so there is no intrinsic value. Next we will go to the OTM. OTM means the spot price, the strike price will be more than the spot price. So anything more than 18,300 will be the OTM. So 18,400 is the nearest OTM. Okay, so there the option price is 60. And there is no intrinsic value, only time value. So OTM will be having only the time value. Okay. So here 18,500. 500, that is the OTM. There is the option price is 40. So OTM price, OTM for the call option will be always the cheapest. 40. So there is no intrinsic value. Intrinsic value is 0. Time value will be the 40. So the option price will be the time value. Both are same. So this is how the option price is calculated for the call option. Next we can see for the put options. Till now we have seen about the ITM, ATM and OTM for the call options. Now we can see about the put options. In the money for put option is described as put option whose strike price is higher than the current price of the underlying asset. Okay, and in the money option will always have some intrinsic value and the time value. That is same for call option also. Okay, so the in the money put option would be any strike price above 18,000. So 18,000 is the spot price. So anything above 18,000 is called the ITM for the put options. Say for example, if the Nifty put price, that is a strike price, is 18,400. That is an example for ITM for the put options. At the money for the put option. At the money put option is described as put option whose strike price is approximately equal to the spot price of the underlying assets. Say for example, if the Nifty spot is 18,300, the at the money for the put option will be same, that is 18,300. At the money put option doesn't have the intrinsic value, it consists only the time value. At the money for the put option. At the money put option is described as put option whose strike price is approximately equal to the spot price of the underlying assets. Say for example, if the Nifty spot is 18,300, the at the money for the put option will be same, that is 18,300. At the money put option doesn't have the intrinsic value, it consists only the time value. Out the money for the put option, that is described as put option whose strike price is lower than the spot price of the underlying asset. So for the out the money put option, entire premium consists of time value by the extrinsic value and it doesn't have the intrinsic value. Say for example, if the spot price of the Nifty is 18,000 or 18,300, 17,800 will be the OTM for the put option, that is out of the money. Next, we can see how can we calculate the ITM, ATM and OTM for the put options. Say for example, if the spot price of the Nifty is 18,300, strike price which is less than this spot price will be the OTM. Okay, so 18,000, 18,100 and 200 will be the OTM put options. That is 8. These are all the strike prices. Okay, in that option price for the 18,000, the option price is 30, intrinsic value is 0 and time value is same as the option price, that is 30. For 18,100, that is the option price is 40, intrinsic value is again 0 and time value is 40. Okay, same for the 18,200 put options. Option price is 60, in that the intrinsic value is 0, only we have the time value, that is 60. 18,300, that is it is equal to the spot price, that is called the ATM. In that option price is 80, same as the time value, there is no intrinsic value. Next we'll go to the ITM. ITM, that is which is greater than the spot price, that is called the ITM for the put options. So for 18,400, the option price is called 160. So what is the intrinsic value? Intrinsic value is 100. That is 18,400 minus 18,300. That is, we have to subtract the strike price and the spot price. So we'll get the intrinsic value. So the 60 is the time value here. And for the 18,500, the strike price is 240. Option price is 240. So intrinsic value is 200. The time value will be 40. 80,600, that is the strike price and the option price is 330. Here the intrinsic value is 300 and time value is 30. So 18,600 minus 18,300 will get 300, that is the intrinsic value. So the 30 is the time value. So this is how we will know the, or we can calculate the strike price of the ITM, ATM and the OTM put options and the call options. So we should be very clear in selecting the strike price when we are into the trade. Okay, so we need to know as a option buyer or option seller which strike price we have to choose wisely. Currently we are seeing the NSE website option chain of Nifty. So the strike price, the spot price of Nifty is 17,465. So the ATM for call and the put option will be 17,500. Okay, and the ITM for the call option will be less than 17,500 and OTM will be greater than 17,500. That is above this 17,500 will be the OTM for the call options and vice versa for the put options. Hope this video is useful to you. Please don't forget to like, share and subscribe. Click the bell icon too for my upcoming video notifications. Thank you for watching.